I want to thank you all for joining us today for this important discussion around the Corporate Transparency Act. We're going to peek behind the curtain with experts from real estate law, estate planning law, banking, wealth management, and general business law as well. The Corporate Transparency Act is one of the most widespread piece of legislation since the Patriot Act. And today we're going to have an amazing discussion talking about what you need to know if you're a business owner, if you have an LLC. This law will impact so many people. On this page, you'll notice that there are two resources linked below from this recording. There is a complete overview and guide with links towards the last page to FinCEN and various other pieces of information from the Department of Treasury, breaking down the law and giving you an overview. And then there's a one-page summary as well. We welcome you guys and thank you for joining us for this discussion. Please let us know if you have any questions as we get into it today. I want to welcome everybody for this important discussion about a new and potentially widespread act that was enacted in 2021, which is the Corporate Transparency Act. If you are a business owner, if you have an LLC, if you have an estate plan with trusts and LLCs, if you deal in real estate, if you deal in banking or law or finance, this act will impact you and your business. And today we have assembled a team of experts in banking, in business law, in real estate law, in estate law, and in wealth management and financial planning. So I'm excited for us to share with you the insights around the new Corporate Transparency Act. But before I do, I'm going to allow our guests to introduce themselves, starting out with the wonderful Mrs. Anna Sanchez.
Good morning, Eric. Thank you for having us. As Eric mentioned, my name is Anna Sanchez. I'm the Senior Vice President of Commercial Banking at Truist.
Tucker.
Yeah, good morning, everyone. My name is Tucker Villarreal. I'm an attorney with Richard Rodriguez and Skeeth, focusing primarily in the corporate practice.
Okay, Sean.
Sean Bukowski, the principal of Bukowski Law Firm, where we protect your commercial real estate assets from dirt to disposition.
Love it. Kyle.
Kyle Robbins, Robbins Estate Law. We do estate planning and asset protection, so all kinds of entity planning and anything you can think of.
Love it. And everybody that doesn't know me, I'm Eric Negron. I am the CEO of Forefront Wealth Partners, and we focus on working with business owners and families around their wealth management and planning needs. So I want to jump right into this with you guys and really talk about, what the heck is the Corporate Transparency Act? Why did it come to be? And what do folks need to know about it? So, Sean, what the heck is the Corporate Transparency Act?
It's an act that the United States Congress enacted that requires all corporations. There are some exemptions, and I'm sure we'll get into those exemptions later. But basically, all entities formed, whether that's a corporation or an LLC or whatever, to file information with the federal government that tells them who either a 25% owner is or who the controlling party, if there's a controlling party of the entity. So, basically, not every entity, but almost every entity that is formed is going to have to file this report with the federal government, disclosing information about who the beneficial owners are of that entity.
Thank you, Sean. And for those of you that are listening in, the information that has to be disclosed is the name, the date of birth, the address of the owner, driver's license, passports, an image of the document, etc. So Anna, thinking about the Corporate Transparency Act, how does this tie into already existing documentation requirements that banks have for business owners and entities.
So the way it ties in, and just to reiterate, the banking industry, in particular, your larger banks have already been required to obtain this information at the time of account opening or loan application. And primarily, the reason behind that is to help support and combat criminal activity that comes in the form of money laundering and financing of terrorist organizations, things of that nature. So it helps the government stay ahead of those criminal activities.
Thank you.
And also
yeah.
allows the banks to stay on top of that as well.
Awesome. So one of the things that the folks that are out there listening to is that this sort of documentation and knowing your customer has been paramount for banks, and it actually really started after 9/11 with everything that happened with the terrorism that happened in New York City and the towers, etc. And the issue that the country has faced is we have no idea who owns what entities and where money is moving through. And the Department of Treasury and FinCEN basically rolled out CTA in order to provide more transparency of shell corporations so that we could essentially combat terrorism and the flow of money to illegal and illicit activities. And so I think it's paramount around this documentation and this disclosure that's coming out. So Kyle and Tucker, from a business law and a state law standpoint, what do you see as some of the implications of the Corporate Transparency Act? And maybe Kyle, if you want to go first, and then Tucker can go after you.
Yeah, business implications. Number one, privacy is a major concern, and in my industry, clients are routinely trying to seek privacy. We're setting up these trusts and these private documents to remove them from government control, like avoiding probate and the government and public system, right? So privacy is a major concern, and I think this is going to be really difficult to maintain it, frankly. If not impossible, we really just are at the mercy of now the federal government to disclose who owns these entities, who's controlling the trusts and things like that of that nature. And then also just compliance, annual compliance. This is not like a one and done thing. You have to, make your filing, but then if there are any changes, like if any of the officers, any of the owners change their address, you have 30 days to file. So it's a bit of a nightmare from that standpoint, because some of my clients, we've got 5 or 6 entities where, just mom and pop entities that own real estate, that aren't, these things aren't worth millions of dollars, but now we have all of this added compliance that they have to worry about filing and hefty penalties if they don't get it done this year or within 30 days of changes of their entities. So, you got to be paying attention, you got to be moving fast, or else it could potentially bite the little guys is what it's headed to, because I don't know if we've mentioned it, but it really only applies to entities with a gross annual income of less than $5 million.
Got it. So if it's less than, so it's basically everybody that has a small entity. So for those of you that are listening in here, if you own a business or have an LLC, or you have a trust that has business interests or real estate interests, you better do a very, very good job of keeping organized records of when you do stuff and disclosing things. So Tucker, from a business standpoint, how do you see the implications of the Transparency Act on, let's call it, mergers and acquisitions or exits in general, with, essentially so many baby boomer business owners exiting over the near term? And how do you see this coming into those types of transactions, and what sort of issues do you see around due diligence, et cetera?
Yeah, so that's what Kyle is saying. Compliance is going to be a big issue. I think even particularly this year, where any entities formed prior to Jan 1 of this year haven't complied unless they have been doing their actual due diligence the past 30 days, which lots of all businesses aren't focused on that right now. So when it comes to actually selling your business, A lot of the reps and warranties now are, I would imagine, are going to have to include compliance with the CTA, and that's going to be part of what's called the fundamental representations included in these purchase agreements. And so, one, you're going to have to go comply during due diligence process, and as clients, you're going to make it it might be hard to comply if you don't know certain things, and going forward. I mean, it's just everyone's going to have to be more mindful of updating these processes. On the buy side, if you're going to be creating special purpose entities, SPVs, for example, you're going to need to comply with that within 30 days, and figuring out who is going to be the new owners of the entity, depending on what kind of rollover aspects might be included. So there's just a lot of things are going to be coming up, and a lot of people are going to be realizing, oh, so and so might own a small percentage, say 5% of the company, but they have they're considered a chief operating officer, and so that can be considered someone who has significant control of the company, and so they have to also be giving their information to comply with this. So big implications going forward.
So what? Go ahead, Sean.
Yeah, I just wanted to jump in on this issue too, because and kind of follow up what they're saying. I read something put out by some government agency that was like, oh, the compliance shouldn't be that big of a deal because you're only asking for a little bit of information, and that might be the case if you own one entity. But in real estate, every single deal we do has minimum 3, if not 5, 7, 10 entities. And so, like, I have clients that we've talked to now that have 200-300 entities from just doing real estate deals over the last few years, and to be able to have to file all of these compliance reports, it's going to be a significant burden and a significant expense. This isn't a sort of small easy compliance issue. This is a big deal and a big compliance issue, and as Tucker said, especially in the first year.
It's really intriguing that what you brought up there, because as Tucker was talking, as you emphasized, Sean, I was thinking specifically that it really speaks to operational process and internal controls and accounting. So anybody that operates a business is going to have a process for how they track all this information. They're going to have systems, and to be honest, the average person out there who has an LLC as part of their, let's call it their estate plan, or they have a family trust or something to that nature, most of them are not sophisticated. So this is going to be problematic for them, let alone what you described, Sean. If you have a massive enterprise with layers of LLCs, just the sheer tracking of this, of dotting the I's and crossing the T's, is going to be, there's probably going to almost have to be somebody in every organization that's tasked with monitoring this and tracking this, and like this is going to have to be woven into processes across the board, whether you're a real estate attorney, whether you're a banker or business law or financial advisor. This is going to have to be a part of the conversation for things we got to make sure we do right.
It's interesting, this whole new act for me, because Sean, just based on what you said, every one of those entities has a bank account, and if we're already collecting that data through KYC, customer due diligence, and customer enhanced due diligence, which is what Kyle was talking about earlier, about 25% ownership, the controlling person, the beneficial ownership form, and so on. Banks already have that. So, Sean, to your point about the increased expense and the time it will take and the resources that it would require to get all of those things changed, what do you think could be a reason why FinCEN wouldn't just go to the banks and collect that? I mean, I understand the privacy laws, but what are your thoughts around why the banks weren't involved in terms of collecting that information, since we're already doing it?
It's an excellent question, the one that I don't know the answer to, other than they want to be able to control the data. And I don't know why that is such an important piece for them to control. Like you said, that the banks have this information. You can get some of this information from the IRS. The IRS has a lot of this information too, right? And so why do we need a whole separate bureaucracy to collect data that either A, is already out there, or B, nobody, a lot of owners, as Kyle said, don't want to have disclosed. So I don't know.
To me, it's interesting. It just speaks to inefficiencies and the bureaucracies in our government in general, because that would have made a lot of sense, Sean, to actually sit here and like, oh, the banks already have this information. They already have to report on certain types of information to the IRS, and the Department of Treasury and FinCEN are connected to deal with money laundering. Go figure. We just connect the two and we get what we need, and we remove the burden, and there's updates that happen. So it's just the whole thing about this particular act that I think makes a lot of folks fearful is two things. One, if you don't comply, there are significant fines. So those of you that are listening, I'm going to re-say this again, re-emphasize it. As of January 1st of this year, if you start a new entity or you have any changes to your entity, you have to report within 30 days. And if you already have existing entities, you have until January 1st of 2025 to comply. So this affects everybody across the board. The second area of concern is, as Kyle said, is privacy. I mean, call me a conspiracy theorist, but I tend to think that this really coincides nicely with the $80 billion of funding that the IRS got for enforcement around what's going on with taxes. So if I now have a database with everybody who owns an entity that has ownership, that are probably typically going to be wealthy individuals and entities, and I now have additional funding with the IRS, I got to think there's some data that's going to be shared there around which returns are going to get scrutinized. So, I mean, maybe it's me, maybe I'm being a conspiracy theorist, but I'm curious for what you guys think around this regarding the disclosure of information and the impacts potentially around targeting from the IRS or government entities.
Yeah, I'm with you. I mean, I think this is highly taxable, motivated law right here, and I also think that's why they made it. They didn't go to the banks. They made it clearly the individual is responsible, and they want to be able to hold the individual accountable. And so that's why. I mean, they gave this to this FinCEN stands for Financial Crimes Enforcement Network. Right, they gave it to the criminal department of the Treasury, and so not only is it a $500 a day penalty, but it's potential jail time. And so you can't put a bank in jail or whatever, threaten them necessarily with that. But an individual, that's hands down what they are fine with putting the burden on the individual, because individuals have to file their own tax returns too.
Yeah, but I want to reemphasize what Kyle just dropped on you all that are listening to. $500 a day and jail time if you do not comply with this. One of the things I was thinking about, Sean, as we were preparing for this discussion we're going to have, is how this impacts, real estate. One of the things that was going through my brain was a lot of times companies will buy up large chunks of land, discreetly, so that the price doesn't go up. Do you see any implications here with CTA and the impact there, or could maybe just break down some of the issues you see in the real estate sector in general with CTA?
Yeah, I mean, even now that's hard to do in Texas because for two reasons. One, you're going to have to do a filing. If you're buying through an entity, you're going to have to do a filing through the Secretary of State that has a lot of information on it. Now, there are ways I know Kyle can set up trusts. There are ways that you can be discreet about it. And if you form an entity in Delaware, for example, to do this purchasing, you can avoid some of that information. So yeah, I mean, that's a potential. But the other issue, though, is theoretically, I believe, this database is supposed to be very private and secure and only available to certain government entities, right? So, I mean, do we trust that? I don't know. I have
The
no
key
idea.
word was theoretically there,
I
Sean.
mean, yeah. So I mean, who knows how it plays out in actuality? We'll see.
So when we think about it, what additional implications do you see in Kyle on the estate planning front with regards to CTA? How do you see it getting woven into your process of dealing with families that are, setting up trust or family limited partnerships, et cetera?
Yeah, it's definitely given us a lot of thought about how to structure these things, right? Because a lot of, like to Sean's point earlier, a lot of families will have multiple entities and they'll lump it into a single trust, right? To hold and control all of these different entities. So now we have more annual compliance to think about of, well, wait a minute, do we really need 10 different entities that we would potentially have to monitor with additional information. Another thing is a lot of these entities in our trust, most families use a revocable trust, which means there's no tax ID or filing. But these entities, the same is true. A lot of these entities, if they're individually owned, also don't have a tax ID. So we can lump them within a trust. And I'm not 100% positive that you're not going to have to get an EIN number to disclose. That's one of the requirements on the form. So, that would be really unusual. I don't think that was the intent of it, but that's one thing we're looking at is, oh my gosh, are we going to have to, account for all of these other actual income tax filings annually through, but not only the entities, but also up to our trusts. So just the number of entities that we're recommending now may go down, which has its own implications I won't dive too far into. And yeah, at the end of the day, it's just going to make things a lot more of a pain in the rear in my world, right? I mean, with a trust, the beauty of it is there's no trust police, right? When we're designing an estate plan, it's a private thing, right? It's a family. We want to keep it private and be able to just do what needs to be done without any other interference or involvement. And now all of a sudden we potentially have the federal government that we have to consider in addition, to whenever we're structuring these trusts and deciding what assets to put in them and things like that. So it's at the end of the day, in my world, I'm just used to a lot more freedom and privacy, and this is America. we like to be individuals and leave us alone, and it just seems like a lot of the plans that we've designed and the assets that we've structured are a lot more subject to regulation and involvement at this point in time. So none of my clients are happy about this. I can tell you that much.
Anything that you want to add, Anna or Tucker?
Well, I wanted to say, luckily they gave us an extension for 90 days to comply for this year for new entities. So say, for example, you formed your entity on January 1 of this year. We still have we still have some time for that, which is good. Because when I first heard 30 days, that was a panic because it's like, oh my God, we really need to learn this really fast, or our clients are going to suffer some consequences. So luckily we still have some time, and it's we can still it's a learning process. I think one of the interesting things, starting off on this is it's reformulating how the typical business formation is done, and it's we need to form the entity, get your entity documents signed. Always preferable to do that soon. Get your EIN, get your DBAs, because all that information that's needed prior to complying here. And so, because if not, then say if you get a DBA, for example, you have some entities having 20 DBAs, and to my understanding, you're going to have to upload all those DBAs to this compliance system, and that's going to be tedious to a lot of people who a lot of people just get DBAs left and right, because that's their business model. You're going to have an extra step now if you want to do that.
Well, thank you, Tucker. You're talking about me here. I probably have at least 5 or 6 DB.
Maybe I was thinking about you, Eric. But
What, did you have anything that you wanted to add, Anna? Did you have anything that you wanted to add, Anna?
No, just, not really, other than get ready. When we rolled this out, it was a lot of pushback. But our consequence was only not opening an account, not daily fines and jail time. So we're in for, I think, some pretty good resistance on the part of the owners of these entities. So
Yeah,
it's going
I
to
would
be
say
difficult. I'm curious too. Go ahead. Oh, go ahead.
I was going to say, from a wealth management standpoint, one of the things that we tend to see with families or entrepreneurs that we work with is, as Kyle said, is privacy is one of the primary drivers of how they operate with their wealth. And it's going to be interesting. I think a lot of the education and the burden for the education around this particular issue is going to fall on the wealth managers and the estate planning attorneys to make sure that these things are happening with clients that own family businesses, that have family limited partnerships, that have sophisticated trust work. And there's a real concern around privacy. And as we alluded to earlier before, potential targeting from the IRS. From our perspective, I think it's even more of an important time. If you own a business or you're a family or you have significant net worth, you better be doing some asset protection. You better be looking at your plans to make sure that you're CYAing yourself and your family, not only from potential additional red flags or targeting from the IRS, but just, what happens if the database leaks and people find out who has means and who doesn't have means? And, folks, nowadays are litigious, and now your family's personal financial business is out there, and now everybody knows about your net worth and what you own and what you control. And so this veil of privacy, while good from, while coming from a place of good intention around curtailing and stopping money laundering and terrorism and illegal activities, it really is going to have some unintended consequences, I think, across the board that probably haven't been thought through. So we're going to have to see from a time perspective how that plays out in real life, because as Tucker alluded to, initially it was 30 days that you would have to file, then they extended to 90 days. Like everything that Congress or the government or government agencies do, they roll it out, they give us a certain level of information, and then they refine it over time when there's enough complaints or feedback from different professionals.
Well, and to that end, Eric, I'm wondering what y'all are telling your clients right now. Like, I'm telling my clients that on pre-2024 entities to, gather the information, but let's hold off on filing anything till much later in the year until we figure out if there's changes, if there's pushback, or just get clarification on how everything that needs to be filed. So I'm wondering if are you guys kind of having the same view, or what are you doing?
We pretty much told all clients to wait until the fourth quarter to address this. Like, get your stuff together, talk to your professional team. So those of us on this call, the real estate attorney, the estate planner, the banker, the business attorney, the wealth advisor, and myself, forget about having a comfortable Thanksgiving or Christmas. We're going to be knee deep in Corporate Transparency Act work for our clients.
That FinCEN database is going to crash every other day.
So for those of you listening in, and one of the things that you should note is that we will be providing resources down in this episode. We will be providing a link to a white paper that breaks down everything that you need to know, a visual that breaks down what you need to know around the Corporate Transparency Act. If you have questions, you're going to want to go to FinCEN's website. We'll put that down here in this discussion as well, so you can go and get more information. There's some YouTube videos you can watch from the Treasury Secretary, Janet Yellen, and some other folks that are extremely helpful to explain why they did this. But I just wanted to comment that here. Is there anything that you guys want to add regarding Corporate Transparency Act as we get ready to close here?
I'll just say, I mean, I talked about this at the beginning. If you're a business owner and you're thinking, this is the year I want to sell, well, then this is also the year you're going to, provide your information, because any sophisticated buyer is going to require you to comply with the CTA, and it's better to do it now than later when in the depth of due diligence and you're already being piled on a bunch of stuff that you don't want to deal with. Maybe that's for another podcast, but yeah, but it's something coming up. It will be in the contract. I am curious of how strong the language is going to be, what the pushback is. How this might affect reps and warranty insurance. It can get kind of it can get quite complicated quickly. So better do it now, sooner rather than later. That's all.
So to Tucker's point, this is what I would reiterate to everybody: reach out to your professional team, talk to your banker. Talk to your estate planning attorney, talk to your business attorney, talk to your real estate lawyer, talk to your wealth advisor, talk to your CPA if you have one. You need to be having a conversation around this and get a proactive game plan in place so that you can get your information organized and you can be prepared to fight, so that you can avoid 500-day penalties and you can avoid potential jail time, and that you can put in place processes and procedures for your family or your business for how you're going to address this and manage this going forward. Because as everybody shared today, this will have an impact in banking, this will have an impact in business law, in real estate, in estate planning, in wealth management. It will affect you across the board. I want to thank our amazing guests today, Anna Sanchez, Tucker Villarreal, Sean Bukowski, and Kyle Robbins, for joining us. And I want to thank all of you for spending some time with us. If you have any questions, please comment down in this episode. We will happily answer them for you. And we thank you so much for joining us.